Welcome back to another installment of our PPP series. If you're watching this, you're probably sneaking up on getting your forgiveness application submitted to your lender. The timing on this video is somewhat intentional. If you've been reading the headlines, a lot of the big banks have been holding off on opening up their forgiveness portals, and our sense from talking with folks is that they're going to open those up soon and start accepting forgiveness applications. So with that in mind, we thought we would do a recent update on stuff to consider on that PPP forgiveness application. Hopefully by now you've got the bulk of the work done. You're working with your CPA, collecting all the documentation that you need. Not a lot new on that front in terms of what is required. You're crunching your numbers. You've kind of figured out if you need to rely on safe harbors or not. So hopefully you've got most of that done. So you're ready if you want to submit early. And we'll talk about if you want to submit early here in a few minutes. But with that in mind, we've got a few new updates that have cropped up in August that you might want to keep in mind before you hit that submit button when the portal opens. So Taylor, I guess let's get into it. We've got two new updates that came out in August. We've got a set of FAQs that came out on the 11th and a new interim final rule that came out on the 27th. I don't really have any particular way of going through this, so let's just get started. I think one of the big highlights for me was confirmation of that paid or incurred standard. I always felt pretty comfortable about that one, but those FAQs really solidified that we're really expanding the amount of expenses you can get in under this thing.
Right, absolutely. And, you know, if we take a step back and we think about some of the developments and just the winding road that this whole process has been for everybody, we think back to, May or earlier, and the fact that we initially had this kind of 8-week period, right, that we were only thinking about, and that was sort of the whole world that we had available to us. And since then, in addition to some of these, the August updates, we've really widened our scope for our potential kind of forgivable expenses and the period of time that those can come in. But what some businesses and what some of our clients maybe aren't initially thinking of as we're starting to talk about this application process, the forgiveness application process, is that you could still choose to go back and do that 8-week period. And, this rule, I think in particular, the fact that we're widening and confirming that we have this paid or incurred standard for some of our expenses is, I think, especially powerful for those who are maybe really close to saying, well, I might as well just do 8 weeks. Maybe that's the tipping point, or they, have any other number of reasons why, we want to fit it in, right at the end, or, there's a number of kind of fact patterns where the timing on those expenses can be important, but that's one just to think about if you're looking at 8 versus 24 weeks, worth kind of remembering that you've got a little bit of leeway under that paid or incurred language for sure.
Right. Yeah. At this point, it was funny when we started this, a lot of our planning was, oh my gosh, how am I going to spend all this money and get it all forgiven? And now, there's really not a question that you should probably be able to get it all forgiven, right? Even if you were, restaurant workers or people that were closed, 24 weeks is a lot of time. Now it's almost picking which period makes your substantiation easier. And in that same vein, we did get some clarification too on those FAQs about who gets to use the alternative covered period and who doesn't, who's got a prorate pay periods and who doesn't. We're talking about, people with biweekly or more frequent can use the alternative covered period. If you're less frequent than that, so if you're a twice a monther, if you're the 1st and 15th, or if you're paying people monthly, you're not eligible for that alternative covered period. And that shouldn't have been a revelation. I think if you read between the lines in that first set of regs, that was always the case. But this, puts some more meat on those bones too. And it's largely a documentation issue, right? That alternative covered period makes it really easy just to pick whatever, pick whichever makes it easiest. You're going to pick the start date of your pay period. It's going to line right up. You're not going to have to, pull a payroll register and kind of cherry pick who worked which hours, when the pay actually accrued to that employee. So it's not a matter of really picking, I don't think, which makes it easier to get to the max forgiveness amount as much as putting your application together easily, right?
Right. Yeah, absolutely. It's a really good point. And, and a couple of the other kind of clarifications here, thinking about what are kind of permitted expenses. We had a number of conversations with clients about, fringe benefit related expenses. So we're talking about, or benefits related expenses such as, health insurance and retirement benefits and things of that nature. And some clients, some businesses out there were looking at this as, can we prepay any potential expenses here? And now we have some clarification that, that isn't going to work. Basically, you can't prepay those health or retirement benefits, unfortunately. So that's another piece to keep in mind. We just want to make sure we're including, only what's allowed, of course, because we don't want any issues once that application's put in there. But and similarly, another kind of clarification I just mentioned would be that mortgage interest piece. We had a number of conversations as to what exactly is mortgage interest, and we'll get to a couple of clarifications really here. But the first one we received in August was that it's got to be a secured business debt and not unsecured debt. So we can't be talking about business credit card, things of that nature, right?
Yeah. Yeah. The prepayment of those certain expenses was, to me, one of the biggest revelations from those FAQs. Uh, and the application was kind of poorly drafted in that it contemplated certain prepayment of expenses. We talked about mortgage interest in that forgiveness app, and it said you absolutely cannot prepay that. And then you kind of infer by silence, right? If you've taken the time to draft a prohibition on prepayment of mortgage interest, but you didn't make that prohibition on the other stuff, I was kind of in the camp of like, well, you didn't make the rule that says I can't, so I'm going to go ahead and do it. And now, now we've got this new rule that says actually you can't do that either. So it's a helpful clarification. Kind of glad a lot of the lending portals didn't have that figured out, because one of the gray areas that I still don't know the answer to is what do you do for these smaller banks that didn't wait, went ahead, opened up the portal, already gave you the stamp of approval, it's off to the SBA, and now they change the rules. What are you supposed to do? I don't have an answer to that. I'm not sure anybody has an answer to that, but it's certainly in the go ahead and wait camp. Before we move on to some of the other stuff in terms of prepayment of expenses, one caveat I wanted to mention, come up with a few clients, is this discretionary profit sharing contribution by employers for their retirement plan. And this is a really interesting issue to me because a lot of people have a set time of year that they pay this, right? But it's for the prior year. So like the way our firm does it, we have a profit sharing contribution that's calculated based on 2019 numbers, and then the tax code allows you to wait until it's like September of 2020 to actually make that payment. And usually you wait all the way up until the deadline to pay it, because why have that cash hit earlier than you have to? But legally, when you look at the plan document, it's purely discretionary. You already know what the number is going to be. It's purely formulaic based on 2019 numbers, and you just have the discretion to make the payment before the statutory deadline. So to me, I think you still count that. I think if you went ahead and already paid that early, you made that contribution, legally you were entitled to do that. And just because it was a little earlier than historically you made that payment, that's really the only leg the SBA has to stand on. So a little aggressive, but if you are kind of in that gray area and need to juice a little in there, you've got a little risk tolerance, I think you've got some wiggle room there. But I'm a little aggressive. Let's see, let's move on to the next stuff. That was, I think, were the highlights from the FAQs. Moving on to that IFR. Couple of high points here. One was this issue of, who's considered an owner employee and the limits on that one. You want to talk about that for a minute?
Yeah, absolutely. So this is an issue where, we were talking about owner-employee kind of compensation and owner-employee kind of related rules here. And through all of that, there was no clear definition as to who is an owner. And so it might be easy in a situation where we're talking about a relatively close pool of ownership, but you start talking about, opening it up to, larger groups of owner employees. And how is that defined? And you had a decent reason to believe that the rule might be kind of based on a 20% standard. If you own at least 20%, that would get you in under typical SBA guidance, and SBA regulations that are out there. And so that was the rule that a lot of businesses out there were relying on. And as per usual, the late August rules come out, and it turns out that we're now going with a 5%. Any employee who owns at least 5% in the borrower is subject to the owner-employee limits. Now, this can actually maybe push you in a good or a not so good way. We have had a few situations where it can be helpful. Whether you're an owner employee or not can be helpful depending on the situation, but it's a bit of a game changer, or at least maybe not for everybody an enormous, totally going to change the game. But for some clients, we've had lots of conversations already, or if you've really thought about how owner employee compensation and all of that and the limits that apply there work, and you haven't looked at this yet, we probably should have a conversation, because it could be pretty significant to your forgiveness application.
Yeah, that's a great segue. Those FAQs and the IFRs again changed the owner employee compensation limits. And it's different for if you're a C corp, you're an S corp, you're a Schedule C or a Schedule F. They're all different, whether or not you can include your health insurance premiums, whether or not you can include your retirement contribution premium stuff as compensation, or if it's just cash. And it's been changing a lot. It's changed again. And this lower threshold of instead of 20%, now we're looking at 5, is going to yank a lot more people in and be subject to those limits. So I think if people need to be looking at that, they need to redo their math and make sure they're not including stuff that they shouldn't, because the new forgiveness application has certifications that you've done all this correctly. So you need to make sure you've had that done. And you got to evaluate how you own stuff too, and not just individually. You own it through an estate planning trust, or maybe you've got an ESOP. That would throw a different layer of things that, make sure you're looking at who's the legal owner versus beneficial owner. There's all sorts of issues to address there, and you just want to make sure that you're doing it right. And that might be a video for a different day. For now, I think we would encourage people, if you're an owner and employee and you don't feel 100% confident in how you calculated that comp limit, give me or Taylor a call and make sure that you've got that right. Okay, moving right along here. The next one is this new limitation on subleases. This was kind of new to me too, and it's essentially a fairness argument. And I always like to think about it as what are we trying to accomplish from a policy perspective here? And it's really just making sure that PPP dollars only are applied to stuff that are actual business expenses. So if I'm leasing a 5,000 square foot building and I sublease half of it to somebody else, the new rule essentially says that I only get to use half of those expenses in my PPP forgiveness calculation. And I think that makes sense, from a policy perspective and what we're trying to accomplish. But it is a new rule, so you got to be aware of it. And there's all sorts of kind of attribution rules here and related party rules. Another one I can think of is this renting a building from a related party. So if I've got a land LLC and I rent it to an operating LLC, there's this kind of big new limit in my mind that limits the rent expense to the mortgage interest expense of the land company. So if I'm an operating company that rents from an affiliated land company, I can't include the whole amount of rent. I can only include the mortgage interest, the pro rata share of mortgage interest in my forgiveness calculation. That was a revelation to me. And I think the big takeaway from that is that if you've got a land company that's got property paid off, you're just done. You get no rent. That's big too. That was unfortunate. More stuff in here too, about home office expense and that kind of thing. A lot of different rules related to use of space and how much you can include on your application. The policy consideration to keep in mind is it's, only strictly for business use and not non-business use, not affiliated parties. So if you're just throwing in the whole number and you find yourself in that factual situation, you know, come back and see us. So I think that highlights a lot of the big changes that we saw in the last month. And to me, one of the things that it also highlights is the fact that even though the big guys are starting to open up their lending portals, you might have it ready, but you might not want to hit submit yet.
Yeah, yeah, I think that's a really good point, and a good kind of segue here to if there's got to be one biggest question right now that everybody's getting in, and I think I've been fielding the most at least, it's when do I get my forgiveness application in, right? And that's honestly that's the potential that rules might change more. Could be a reason to get your application in. Could also be a good reason to wait though. And I think my sense from talking with a lot of our clients is that it might shade towards the waiting side of things more than anything else. And so maybe to back up a second, we can maybe roll through a few issues on the timing piece, right? Um, on one hand, you have a very long time to get your forgiveness application in. It's 10 months after the covered period, essentially, right? So you might be looking at 10 months after 24 weeks after your loan was deposited. Really, you could be talking about well into 2021 before you are have to get that application in. So obviously the question is, so when do we get it in? Should we do it now? We have lots of clients who would like to have this whole thing in the rearview mirror at this point. The rules have changed so many times, and in good and bad ways, pro and not so pro borrower. But the question now is when do we get them in? And if you're not taken by this, I just need to get it in, I need this over. I think it's worth thinking about some of these other factors. One of which, I'll throw out for the rule change issue, and Mike, maybe you can cover a couple of the others here. But the rules, like we said, the rules have changed in both directions. There have been discussions in Congress potentially to make the forgiveness application significantly easier, particularly for relatively smaller loans. I think the bar that we've seen so far has been 150,000 or smaller, somewhere around there. So if you're in that ballpark, honestly, the possibility that your loan is nearly auto forgiven might be a reason enough to wait at least a little bit, maybe see what happens in the election, something along those lines. Something to keep in mind at least. If you're larger, if you have a larger loan, maybe it's a little more of a questionable wait. Maybe it's a wait and see. Maybe it's a wait and see depending on the election. Or maybe you get it in because there's also the possibility that the rules move in another direction. It's been awfully difficult to predict what happens throughout this saga. That's for sure. So I can't fault anybody for getting their application in if they're only thinking about how rules might change. But it pushes you, I would say, on the whole, I think it pushes you a little bit to let's wait and see for a bit here.
Yeah, and it kills me to say that. So I think a lot of small business owners are kind of of my mindset. I'm sick of the PPP program. I'm sick of the rules changing. I just want the thing dead and done. I think you got to wait. The exception to that maybe there are those small ones where you're sitting in a position where I'm under 150. I know I qualified for full loan forgiveness. Maybe I did a safe harbor. Maybe I just kept everybody on regular hours, full pay, and it's easy. And I know if the rules don't change, I'm fully forgiven. If I get the 150 auto forgive, I'm fully forgiven, and I just want to be done with it. Sure, go ahead and get that in. There's really nothing that's probably going to change for you. But everybody else, I think you've I think you've got to wait. And it kills me to say that, but I'm also not sure if you're one of the big boys, right? If you're north of 2 million, I'm not going to want to be the first through the door, right? I don't want to be the guinea pig for the audit, or any of that either. So I think there's a lot of compelling reasons to wait. We don't know how the rule changes are going to work for the folks that have already submitted. So maybe if we get a rule that clarifies that, I would really doubt that we're going to get a rule that says you can just rely on whatever the rule was when you submitted. I'd be shocked if that was the rule. I suspect it's going to be kind of this amend and fix kind of procedure. But until we have that rule in place, I'm not sure I would want to be gambling one way or another on that either. So if you're an owner employee and you think they're going to shift those rules on you again as to what you can include in comp, I definitely wouldn't take, the ostrich approach of let me just get this thing through and bury my head in the sand and hope for the best. I would wait.
And
I guess
financially, right, Mike? I mean, you almost have, you certainly aren't hurt by,
no.
by waiting, right?
Yeah, you already got the money, already spent the money. So I think it's
It's a
probably
1%
going to spend.
interest rate loan, right?
Yeah, well, you're probably going to spend more in legal fees and accounting fees if you got to fix it than if you just kind of sit tight and make sure you get it right the first time. So I think those are all good reasons to wait. I think another reason to wait is, and we've seen this, it's this IRS notice 2020-32. It's a double dipping rule, right? So it essentially says that if you've got PPP dollars that have been forgiven and you paid expenses with those, you can't take a deduction for those expenses. And conceptually, I mean, the rule is entirely consistent with the tax code, right? If you're getting money free of income tax, if you're also allowed to take a deduction for the expenses that you paid, that's a double benefit. You get a deduction for income that you didn't pay tax on. So I get it. But this is kind of a political issue, right? If the Republicans have their way, you are going to get the double dip. And there is a good argument that this was the intent of the legislation. It's really meant to be a bailout, and if that means you get a double benefit for tax purposes, so be it. But we're stuck on that one, so that might be another reason to wait, depending on how aggressive you are. Now, I'm kind of the pointy-headed tax lawyer, and I read this notice 2020-32, and it says that PPP proceed expenses aren't deductible to the extent the PPP loan has been forgiven. So if you want to be, I don't even think it's that aggressive. I think it's if you wait until 2021 to file for this thing, you can essentially kick the can down the road on the tax deduction issue. And we always want to accelerate deductions. We want to defer income. And this is a situation where if I wait until January 1, 2021 to submit the forgiveness application, I have what I think is a very strong position under Notice 2020-32 that, hey, my loan hasn't been forgiven in 2020, so this whole double benefit rule doesn't apply. It's kind of like drawing on a line, right? If I draw on a line, I pay some expenses, maybe I buy some inventory, I get the deduction on that inventory. And then when I go ahead and sell it, I got to pay the tax on that revenue. Until the PPP loan is forgiven, it's still a loan. So I think you get those deductions in 2020. And you got to do that with the caveat that if we don't get a rule change, this notice is law, and you're going to be disallowed some deductions later. So maybe you've got to go back and maybe amend your 2020 tax return. I don't know how that shakes out, but if you want to take the position, maybe you're going to get a refund. Maybe it's a temporary tax infusion cash infusion while you wait to see how things shake out. It certainly doesn't hurt you. Maybe it's a timing issue you've got to consider, but I mean, I would think about it.
Yeah, absolutely. So, I think on the whole, this is another one of those, it's a bit fact specific. There are reasons why you might want to apply sooner than later, but we're seeing a lot, I guess, to summarize, right? We're seeing a lot of situations where it might be to your benefit to at least kind of have the conversation. Let's think about whether we really do want to get it in right away. As much as it pains me to say that you might have the PPP in the back of your mind for another however many months, it could be to your benefit, right?
Right. Yeah. So let's see. I think that's everything on my list. I think that's the update. Yeah. In a nutshell, we've got more changes to what you can and can't include. So make sure that we're understanding that. If you got questions, obviously feel free to reach out. If you think you might be in the gray area where you might want to push this thing through faster, give us a call. We can talk about that. One of the things people also need to be considering now that these portals are opening back up is those certifications, making sure we're reviewing those. If you don't already have documentation in your file about why that PPP loan was necessary, that's going to be something that gets looked at when the SBA is reviewing your forgiveness application. Did I even need this thing in the first place? So I think that's a lot of work we've got going on right now, is making sure people have that tidied up. It's probably should be more than just some bullet points in an email to your CFO, right? I mean, it should be a memo to the file with, firm financial numbers as to why this thing was necessary, and we can help you with that. I think one more issue we're looking at is M&A issues. If you're a target or even a buyer in an M&A transaction, and one or both of you have PPP loans, that's a fun and interesting little wrinkle. I mean, the main issue there is that there's a change of control provision in these promissory notes that essentially require lender consent for an M&A deal. But then when you get into what happens when we get that lender consent, how do I address this in the purchase price? Escrow provisions and this type of thing, reps, warranties, covenants. There's really a lot. You get down that rabbit hole, there's a lot to talk about. So I think we'll have a video on that. Probably look for that maybe early October. We'll go through M&A considerations when either the target or the buyer has a PPP loan. So with that, I think we'll sign off. Thank you for tuning back in for more PPP updates. And again, feel free to call or email me or Taylor with any questions.
Thank you.